Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Guys, we've got a lot of runaway trains today. The government shutdown didn't scare a lot of investors jumping in these AI data center plays. We're going to get into these charts towards the end of the show to show you some max move extensions on these charts. Truly unbelievable. It's valuable stuff. So make sure you stick around for that. But first, let's check out where everything settled down today. And another green day in the markets, another new high in the S&P 500. Gosh, how many new highs is that this year? Enough that where I can't really keep track. Incredible push in the markets. Check this out, folks. So here in the market summary board, we've got the Dow Jones up 0.33%, NASDAQ up 0.46%, S&P 500 up 0.58%. U.S. oil taking a nice hit, down 0.67%. Gold hit new highs again today, but looks like it was retreating towards the end of the day to potentially not close at new highs, but still tagged another new high. Bitcoin here did get a nice pop, and it is really teetering on a potential bigger move. And we're going to get into that chart in here just a few moments. But first up, let's take a look at the S&P 500 heat map. And we see here we've got some reds and greens on this nice up day in the market. Some of the big boys were really asleep. You see Apple and Nvidia and Microsoft all up less than 0.5%. Tesla, though, shining over here, up 3.45%. Meta, decent decline today, down 2.34%. We're going to look at that chart here in a little bit. Oracle pushing up 2.82%. Netflix under pressure. We're not going to look at that chart today, but we will in another episode because there could be further downside there in that stock. A lot of red in the finance sector today. Very interesting to see. Obviously, we've got this potential government shutdown, but that's not holding people from jumping into stocks and pushing stocks up to new highs as we see here on the S&P 500 index. Now, guys, obviously, we're pushing to new highs. I've been talking about this inclining yellow trend line for quite a while now, and we've hit it, tagged it, slightly pierced it, you name it. We've come in contact with it several times. And this is the line in the sand for when the market starts to have a correction. We don't have a break yet. Matter of fact, we're moving further away today. So the markets are, for now, safe from any sort of downturn as the markets are pushing higher. Look at the 10-minute chart, too, over the last couple days. Now, over here was on Monday, all right? So we opened up in the parallel, came down, tried to break beneath, bounced, and then we see here Tuesday, we just really traded all along the bottom end of this parallel before we ripped higher. Today, we gapped down, and then we tested where? The bottom end of this parallel, almost to the penny, and then bounced higher and really didn't look back. Look at that, guys. We went up, got above the previous highs, bull flagged, and then started pushing higher. Towards the end of the day, a little baby 10-minute topping tail was placed on the charts. But since 2 is starting to form another bull flag. Truly impressive there on the S&P 500. So where can this take us? So I've already defined the downside line in the sand that would break. If it does break, we're coming back down into this parallel. But to the upside, we could push all the way up here to the 50% area of this parallel. That's roughly at 7,000. And I just had, I don't know how, here we go. Something just happened there. All right, tech. If all this investing is going into AI and tech services, guys, this is a little bit different. We're having a little tech malfunction. Maybe that's foreshadowing what could potentially occur in the future for these AI data centers. We'll see, but we'll get through this show with this. Regardless, okay, so next up, the Qs. You see the Qs now pushing up, barreling through this yellow trend line that you see here on this chart, this inclining trend line. This inclining trend line is the area of resistance. So for right now, we've got a nice beat of this area. So what will happen, though, in the future? Where will price take us? Price will take us potentially on the Qs. As you see, I've developed a beautiful parallel channel. If I zoom back out here on the charts, you can see this parallel channel has been containing price on the Qs ever since 2021. And then we have price action that did get a bounce here off the April lows and has accelerated all the way up, coming into contact here and now beating today this inclining trend line. But where could we hit the ultimate resistance? Guys, way up there at 662. That's another 20% higher on the Qs. That could be a big move. I don't think we get there straight away. Look at this RSI in the bottom of the screen. We're all the way up here in the 70s. That doesn't make too much sense for us to barrel on up and tag that. What makes more sense to me is that we have a pullback likely down to this 50% area of the parallel channel. The support area for that's right around 546. You can see another level of support, even a little bit lower at 539. So next up, we've got the SMH. SMH, as you see here, is pushing higher today. And I have this inclining trend line that we also are breaking above as we see this on the charts. Truly incredible stuff for the SMH. Look at the last 4 to 5 weeks, just straight up on the charts. Now, this is a leading indicator. And also we're going to get into some other stocks, some tech stocks later in the show that really is showing why the SMH is pushing up as much. Obviously, we've got these data centers being built out. There's a lot of money going towards that, and new contracts are being signed. So thus, AI is really keeping the markets afloat. So we need to pay attention to where price could go. Speaking of which, now that we're above and in the top 50% of this parallel, you can see here that we've got a resistance area up here at $358.26. That would be the top end. But again, I caution you, whenever we break out of areas, we generally like to come back and retest them. It could be this trend line. It could also be the 50% area of the parallel. We typically won't have a straight march up like we've seen so far without any sort of pullback, retrace, and getting a bounce to go higher. The same applies breaking through that 50% area. This is taking a lot of energy and effort to continue this drive forward on the SMH. It is truly impressive to witness. All right, next up, the IWM. The IWM, as you see here, not too much going on the chart here of IWM today. We had an up day of about 0.22%. Daily topping tail still holding effect. We had a move down and chop sideways. Near-term bearish consolidation. We haven't matured yet on that bearish consolidation. Ultimate support will be down here at 235.65. Next up, the Dow Jones Industrial Average. Guys, we talked about this the other day, the daily topping tail. The break of the trend line and the trend line on the S&P 500 has yet to be broken, but at least on the Dow Jones, it's already occurred. And I said two things can happen. One, we'll probably retrace and then fall, or we'll retrace and consolidate. And that's what we're doing, guys. That just shows how strong investors are in believing in the markets, even at these highs. It's truly impressive stuff. But this sort of break generally reaches a decline on the charts, especially with a topping tail. We'll see if this topping tail holds in the coming days. Next up, Bitcoin. Guys, I got something big to show you today and to monitor tonight. Make sure, again, I've said this a few times, but for the new viewers, we do have Bitcoin as well as all the cryptocurrencies have their daily close at 8 o'clock Eastern time in the United States. You may say, well, Drew, it's 24/7 trading crypto. Well, you're exactly right. But we need to distinguish some place on the charts where we have our daily candles, right? And well, they've determined that to be 8 o'clock Eastern time US. And that's critical because when technical analysis, you need to understand where the closes are to really draw your patterns on your charts correctly. Okay, so into the chart we go. Pardon these interruptions. You see here we've got a declining or a sideways horizontal trend line right here. This designates the neckline for an inverse head and shoulders pattern with the left shoulder here, the head, and the right shoulder, as you see on the screen. So tonight at 8 o'clock, be watching if price closes above $117,300 to $117,400. As long as we're above that, that would trigger this inverse head and shoulders pattern with a targeted measured move up here at $127,459. That kind of makes sense when I look at the chart. If we do get this pattern to trigger, if I scroll back out, I had another trend line drawn from this pivot back in December of last year, and I connected over both of these pivots, these wicks that you see, but I ensured to get the high end of this red candle on August 14th connected with that trend line, and voila, it comes right through that measured move target. So we'll see tonight, 8 o'clock, what happens. Pretty big situation there for Bitcoin, as that could propel this cryptocurrency up on the charts. Now, it likely would lift all other altcoins too. So that's important to note if you are holding several different types of cryptocurrency. One of the reasons I think we did see a lot of investors piling into cryptocurrency was because we've got our government shutdown going on. and we don't know how long it's going to last. We reviewed government shutdowns and what happens on the S&P 500 just the other show on yesterday. So if you didn't see that, make sure you go back, search for us on YouTube with Trading the Close, watch that video. I went over several different dates of when we've had government shutdowns in the recent history with an expanded time frame, so you can see and anticipate what generally happens. And to be brief with you, give you the cliff notes, we usually may have a little turn down, but then we just rocket right back up, and it's almost like it doesn't matter. But this situation could be different. This administration is talking about laying off a lot of the people that are furloughed. We'll see if they follow up with that threat. That's still to be determined, as well as the end date of this government shutdown. So still we'll be monitoring and bring you any insight that I get right here on this show. So, okay, back into gold. Gold, as you see here, ripping to new highs, but still looking like it's going to close the day right here within yesterday's price range. Still an incredible scenario on gold. This rip up is like a tech stock, no doubt about it. It's overbought. It's been overbought since the beginning of September, yet we still hang out here above 70 on the relative strength index down here on the chart. Another reason why gold pushed up, again, government shutdown. Uncertainty leads people into defensive plays, which gold is the number one defensive play. Moving on up, resistance could be near the $4,000 mark per ounce, right around $3,978 on that resistance trend line. Next up, we've got silver. Check this out, folks. Silver also, another push higher. I was expecting with all this push up, we should at least have a little drawback, little retreat to allow silver to gain momentum to push up and tag this next resistance level almost at $50. We didn't get that. We got a little chop sideways and a push higher. And it looks like today we did close above the previous pivots. All strong and good news for silver, clearing the path up here to $49.83. Beware, though, if you're an investor with silver and holding silver, it is extended and it is due for a pullback at any given second. So taking profits here is not a bad idea with the extended move, and then scooping some up when price comes back down into these support levels would be a prudent way to swing trade silver. Next up, U.S. oil. Guys, I've been talking about this chart on this declining trend line. It seems like almost too long. I almost want to throw this chart away and not talk about it anymore because it's literally the same thing. We keep coming down and pounding on this declining trend line and getting saved. You can see it just a number of times right here. Even rewind back to April where we plunged beneath it, came back up, got rejected on several occasions. And then when we finally got above, we came down and get bounces right here on that trend line. This is just purely beautiful technical analysis, all derived from one line drawn on the chart. See the power of this stuff when you're able to draw these trend lines and analyze charts. You really get opportunities to make money over and over and over again, doing the simple thing that I learned when I was a kid watching Pee Wee Herman, connecting the dots, drawing lines. That's all I did when I was a little kid. And heck, that's what I'm doing as an adult, but I'm making money doing it. So love this stuff, love technical analysis. It truly is a game changer when you can understand these charts. All right, guys, next up, Nat Gas. Talked about this the other week and actually other shows. When we've been pushing up recently on nat gas. Yes, the Northern Hemisphere is approaching winter, so more folks are actually turning towards nat gas to heat their homes, and or at least the demand will be going up, right? So we have seen that in the last 3 trading days, barreling through these 2 levels of resistance, and then today started hitting the brakes at this $3.57 area and closed the day here at $3.58. So what you would want to see if you're a bull on nat gas, you may want to see one more day push up and then a pullback down here to this trend line at $3.46. That would be your buying opportunity for a springboard bounce play up here to $3.83. You want to see this extended move cool off a little bit before you start buying it, because usually rapid moves up are met with rapid moves down, much like seen over here on the chart back in June. Rapid move up, rapid move down on the screen. Next up, we've got Ethereum. Now, guys, this also, with Bitcoin's showing potential near-term bullish activity. But look on Ethereum. Ethereum already had a rocketing run earlier in the year, pushing up tremendously. If I scroll back, you can see we were down here near $1,300 in April. Now we're all the way up closer to the $5,000 mark with current price at $4,335. You see, I've got a trend line drawn on the screen right here that designates the neckline of a head and shoulders pattern with a targeted measured move down here on this declining trend line at $3,500. What price likes to do after it breaks these trend lines is come right back up and attack the trend line in which it broke. So be expecting a lot of resistance right around $4,500 on Ethereum. Support played out great. Price dipped down here to $3,869 and then got a nice bounce up on the charts. So be expecting this area to provide resistance, but I'm a bull on Ethereum. I think Ethereum's got a lot of room to run. So any sort of pullbacks, I will be a buyer, almost hoping that this head and shoulders pattern plays out so I can scoop up some more here at $3,500. Next up, Meta. Guys, this stock is a behemoth, as we all know. They've got their hands involved with how many different things. There's so many products and services Meta does provide. Truly incredible company. But notice this trend line, guys. This yellow trend line is drawn through price action, all right? It's kind of hard to see. I get it. I got a head and shoulders pattern, but this designates what's going to happen on the S&P 500 or SMH or QQQ when these inclining trend lines break, right? So we had price come down, consolidate, then break, and it almost tried to retest, then kerplunk. There we go with the price breaking down, also creating a head and shoulders pattern on the chart. And you can see price action moving down through support. Price did get a bounce today, trying to get back up to 721.57. But this selling pressure, I don't think is done yet, folks. Now, yes, we could retrace to the neckline, but then also the measured move for this head and shoulders pattern is down here under $700 at $656.45. So be watching for that as an ultimate target. There will be stopping points along the way, particularly at this inclining 50% area, the parallel, roughly around $677 to $682. Next up, we're getting into some tech and data center plays, guys. So next up, Micron Technology. Look at the great breakout that Micron's experiencing today. Now, this is on the weekly chart. Let me show you the daily to show you exactly what happened today. Look at this massive green candle pushing and barreling through the resistance area. Notice we came up, consolidated for about a week, and then blasted through this resistance area. Incredible push, all the while being overbought on this RSI displayed at the bottom of the screen. So if I zoom back out to the weekly time frame, still overbought on the RSI, but you can see this is a clear break. So what you want to have happen if you're a bull on Micron, you want to see a follow-up tomorrow with another push higher than today's close. That will then turn this area into resistance or into support, but I'm not going to be a buyer here. I don't care how much drive is in these AI data center plays with this technology, especially semiconductor software, data storage, etc. I can't be a buyer up this high because I know all too well rapid moves up are met with rapid moves down. All right. So first area of support you got to be watching is here, and I'm not a buyer at 178.80. You would be more interested to get into Micron with a decent pullback down to the 150 range. But we are near max range potential here on Micron, but truly great breakout on that chart. Next up, another company that does contribute to some data centers. However, AMD has not really been that hot. You can see here, we've got this inclining trend line. So there's a theme here. Notice what happens when inclining trend lines are broken, right? We had price come down, bear flag, pulled down more, and then bear flagged again, implying further downside, potentially down here as low as $127.27. But if I zoom back out to the weekly time frame, you can see here that we're far off the highs, right? So should this bear flag pattern fail, the next resistance to the upsides at 172.35, followed by 186 and then $195. So really we're kind of bookend. The chart is showing us there should be more downside. But obviously these patterns can fail, but so keep that in mind. Now, if you're not an AMD, what I would do is set alerts right around $144 and down here as low as $127. That way you can start scooping up some when it is discounted and on sale, folks. I love buying stuff on sale. I don't want to pay for it when it's sky high pricing. So that's how I shop in the stock market as well as all throughout the course of my life. All right, next up. Another stock that is involved in AI data centers, SMCI. Now, SMCI, they are involved in several different areas of data centers, whether it be cloud computing, artificial intelligence. You have Microblade and Big Twin for scalable infrastructure. You got big data and 5G edge, you name it. SMCI has just really got their fingerprints over everything regarding data center build out. So why is this stock so low on the charts? Well, SMCI has been in a cloud over the past couple of years, and a really dark cloud. And they've had accounting issues. They've been accused of selling chips to China that's violated some of the rules the United States has conveyed. So investors have really been staying away from SMCI until today. And today we saw a nice push higher, up 9.28%, running almost right here into a resistance area. Next resistance is $53.17. But after that, we could be running up 54.50. Then we're going to be talking about gap fill 57.31. But guys, I don't think SMCI is stopping there. As long as they get their books together, check this out. All right. So look at, all right. Whoop, whoop, whoop. There we go. There we go. Look at this declining trend line. Now, this is a mammoth find, folks. All right. So we've been talking about trend line breakouts. And this breakout that's occurred, and it really started here in June of this year, but ended up declining even more, retesting very close to this declining trend line before bouncing up. Why I bring this to your attention? Guys, this is an inverse head and shoulders pattern. It's got a targeted measured move all the way up here at $109.15. Yes, SMCI has been in a gray cloud for a little over a year. But guys, if this pattern results in a huge move up, you heard it here first, this is looking like a potential 100% increase in gain on the stock of SMCI. Once they get their groove going, they will be pushing up higher on this chart. It happened before. Look at this, when NVIDIA was running. And then again, those accounting issues and a lot of stuff started poking up. But SMCI has the potential to give you up to 100% returns as long as this pattern prevails and does not get negated. Next up, Taiwan semis. Now, guys, I've got the simple moving averages displayed on the screen. Those are these three squiggly lines that you see. The first one, yellow, is the 20 moving average. The blue is the 50, and the red is the 200. Now we're on the weekly time frame, okay? So I bring this to your attention because this is one of the ways I like to find out what can happen for a max move extension. Now you see here we're overbought on Taiwan semis. We did break out recently from this inclining trend line. Price normally likes to come right back down, touch that trend line before it moves higher. Now we've obviously confirmed and accelerated through this breakout. Great breakout. However, it's about time for price to come back. One way I measure and try to find max moves is by measuring distances away from the 20 moving average. You can see here this 20 moving average, we're about 22% up on Taiwan semi, but we still could go a little bit higher. If you notice where we were extended on this measurement, it's about 26%. So we could be pushing another 4% higher on Taiwan semi before we have a nice pullback, or at very least consolidation, allowing this 20 moving average to catch up to price. Because I like to think of the 20 moving average like a retractable dog leash. It's got to hit price every 20 candles or so, depending upon the time frame that you select. Lastly, we've got one more play here with Seagate Technology. Guys, this is an incredible chart. No scientist is needed to determine that this is an overbought stock. Right here, pushing 89.68 on the relative strength index on the bottom of the screen on the weekly chart. Look how far away the 20 moving average is from price. 20 moving average is around $160. Price is all the way up here at 257, implying a 60% or 96-point move higher. It's never been that high anywhere through the history of this chart. It's definitely overbought and overbought extended beyond belief. And good for this stock and good for any investors in this. But I think price and time is basically up on this move. Now, can we go higher? Sure, we can. Well, next major levels are going to be about $275 and $300. You're going to have to start picking whole round numbers, as this is literally jumping off the charts. Now, where's price going to pull back down to? This inclining trend line right around $207. Don't chase this. Wait for price to come down. And by that time, the 20 moving average will likely be up here and also providing support on that stock. All right, guys, a little bit longer show today. Sorry about that, but had some tech issues. We'll have that resolved tomorrow. Thanks so much for tuning in. Don't forget to like and subscribe. Please send this out to your friends. We want them to be financially independent as well, understanding how chart movements occur so you can make money all the while sitting at your house in a nice, easy comfort space. All right, guys, I'll be back tomorrow. Look forward to it. And then we'll digest these charts and give you some great new trade setups then. Until then, have a great day.